Hello, everybody. Today, we're going to talk about real estate, but we're going to talk about the most variable thing in real estate right now, the thing that's influencing it the most, and that's home mortgages. And in order to do that, I've brought two friends of mine that I've done business with for a very long time. They're very experienced. This is Miss Sherry Riano. This is Chris Brazel, and they are owners of the Sherry Riano Team. And I'm going to let them tell you a little bit about their history in lending.
Great. Well, I've been doing this for 22 years, and it's been a wonderful ride. We made it through 2008 without a problem, and now we're back in a little bit of what people are perceiving challenging times, but I promise you that it is not.
That's right.
And I've been in the business almost 20 years as a loan officer. I teamed up with Sherry about 10 years ago, and it's been great ever since. And yes, I as well made it through the 2008-2010 crash. But yep, I think good things are on the horizon for everybody.
Well, that's good. And I also made it through a few crashes myself in 30 years worth of real estate. But really what I wanted to focus on is the top 10 questions that you would like to ask a lender. And I would have to start off with the headlines. Sherry, Chris, I got a headline right here that says mortgage demand drops to a 22-year low as higher interest rates and inflation crush home buyers.
Well, let's talk about that a little bit. Well, you know, last year rates were at 2.9.
Right.
Today they're at 5.5. The difference, what it costs you on a monthly payment for our medium home price of $475 is $578 difference monthly. Okay. So it's something to think about, obviously, but it's not the end of the world. No. Our average rates, based off of what Freddie Mac put out a article about 2 weeks ago, if you look historically, the average rate in the country is about 7% over 50 years. So, I mean, we're still not even on an average. But I think people have just kind of seen this change, used to the lower rates, and they kind of feel a little paralyzed when I don't think they should.
Right.
Yeah.
And inflation's here. I mean, gas pumps,
Yes.
When you go to the gas pump, you're going to get it. When you go to the grocery store, you're going to get it. So, but there's so many things to think about when you're equating whether to buy or not based on the interest rate. I don't think that's the only reason a person should buy a house based on that.
Absolutely not. Look, here's my thought process. Let's go back to the scenario I just ran, right? So the payment from last year to this year on a $380,000 loan, the difference is $578, right? If you multiply that out by 5 years, because most people don't keep their mortgage any longer than 5 years, right? You have, it's like I think it's $32,000, right? That's what you have spent in payment difference. But if you wait to buy and don't buy today in our market with our average appreciation over 5 years being 24.1, you've missed out on $79,000 of just appreciation, not even paying down or amortizing the loan. So
there's a lot of reasons, that makes sense. And of course, I believe home ownership is a great stabilizer and a hedge against inflation. It's always been that way for me.
And I always think, too, people focus too much on the interest rate. If you're comfortable with that mortgage payment and you're able to find a house at that mortgage payment as opposed to focusing on the rate, then that's what you need to focus on as opposed to just the interest rates. The interest rates are the big hot button topic in the news, and that's what people hear about the most.
Right.
You know, and it was a dramatic shift from them being so low during the pandemic to they did go up really quickly. But if people are just looking, hey, I am comfortable with that payment, no matter what the interest rate is, let's go find a house with that payment.
Yeah, I believe that. And I think that was kind of a false feeling of safety. I mean, as long as I've been in real estate for 30 years, I can't remember a 2% mortgage or very rarely a 3%. So it has to be very strange for us to be in that kind of
area. And not taking advantage of it. I mean, I know the headlines, like you just brought up, here's a headline. And I don't know about you, but every time I look at the news, I read a paper, I open up anything, you know, it's doom and gloom, and it's the housing bubble. It's not the housing bubble. It's not going to come back. That's not where we are unless some major world crisis comes about. I don't see that happening to us, and I don't see it happen in our area. Do you? I don't.
No, I don't. I see a lot of relocations still coming in here. I just took a really deep dive with Stacy that does the TAR report, that's been studying our numbers here in the Triangle for literally 30 years. And he says that as long as we have got more buyers than we've got supply, there's no way that we're going to have depreciation. And I think that's what people think sometimes, is that home prices are going to go down. Hey, I got breaking news. They're not going down.
They are not.
So let's talk a little bit about the process. And one of the things I would say is, why is pre-approval a game changer for home buyers?
Well, one of the reasons it is because, one, you can actually offer a letter showing that you are approved, right? Minus appraisal, title, and a verification that you're still employed at the end. I know for you, and you always done listings, and buy, but if you see a letter coming from a lender that you know and you trust, and it says approval versus, hey, they've just gone online, they put some information in, and God knows it hadn't been verified, and we hope it might close. You're going to probably want to advise your seller to take the offer that might be more likely to close. Again, I can't guarantee anything because somebody might quit their job, and that would be sad because I couldn't approve their loan. But otherwise, for me, it's got to be very appealing. And so we always push for the approval. I do the full approval for a client.
That's
a
awesome.
lot of lenders won't do it because they don't want to take the time that it requires. It
Right.
is a time investment
Right.
for the operation staff. But to me, it's worth it. And when we can find any hiccups, get ahead of the game, and really make sure we don't have any problems, because nobody wants to get a call a day before closing and say, sorry, you can't close.
Yeah.
Yeah.
And you mentioned I do list a lot of homes, and I believe one of the things that a homeowner should look for is a very experienced agent, because believe me, when I see an agent that's not very experienced bring me one of those pre-qualified instead of pre-approval letters from a lender maybe that I don't know, that's unproven.
Right.
I can't tell you how many times Sherry's saved the world for me. We've had a loan that was in process, something was due to close, and a blip came up, and that lender couldn't do the deal. But I switched it over to Sherry and Chris, and you got the deal done on time.
Yes.
It's also it makes it better for the client during the transaction as well. When they're in the process of moving and already under contract, they got a lot going on. They're packing their house.
Yeah.
They're moving around. If we already have a lot of the documents up front and have already pre-approved them, then it's just a matter of getting some updated documents as well. It makes it a lot smoother of a transaction once they're under contract as well.
I believe that. So another thing I was going to ask is, should a buyer buy a home with inflation this high?
Absolutely. Again, we go back to the word appreciation. You can't, the money that you're going to miss because you're waiting because of a rate or inflation will never be made up by the loss of the appreciation, by the time that goes by. Time value of money. Still, it applies to real estate as well.
I think so too. And in 2027, you'll be looking back and you'll say, man, I wish I had bought that house in 22. And then if you stay in that apartment, and what are apartments doing? They're increasing I can't even keep up with them.
I mean, someone called me the other day and was like, their rent was going up 10%. Another lady called me and said she's going up 20%. I'm like, that's a big deal.
It is.
But to have your house and already have your payment set,
have a locked-in
priceless.
payment, you know what you're going to do, and but having that locked-in payment is really important when it comes to planning your budget.
Absolutely.
So tell us about some of the loan products that you've got right now that might be attractive.
I'm going to let you speak to that, Mr. Brazell.
So right now we do have the standard 30-year fixed, 20-year fixed, 15-year fixed, conventional, FHA, USDA. Some of the other niche products that we offer now in this ever-changing market, we do have a 2-1 buy down, which is a really great product. It allows people to get into the house 2% below current market interest rates. And then it's 1% below current market interest rates for the second year. And then the third year, it does go back to the regular market interest rate. But those first 2 years, it's kind of a way of easing into that mortgage payment. And, we anticipate or hope that over the next 2 years, your income's going to increase with raises, getting promotions and things like that. So it's just a way of easing into that payment, which is great. It does come with a little bit of an upfront cost to buy down those first 2 years on the interest rate, but again, it's more money out of pocket, but less payments on a month-to-month basis, more cash flow. The money up front does need to come from the builder or seller. It's just one of the caveats of the program, but it is a really, really strong program. And also, adjustable rates are really coming back as well. They did get a little bit of a bad connotation, especially during 2008, 2010. A lot of people knew they got in at the lower rate, and then when the adjustments came, some people did default on their mortgages because the rates went up so high. However, I think right now where rates are at a higher market level, that what we just talked about, if you get in now at a little bit lower of a rate than a 30-year fixed, and if the market does come down over the next couple of years, we can refinance you out of that adjustable rate and get you into a lower fixed payment when the market does come down a little bit.
And I believe the market will come down.
I do too as well. Yes.
We're fighting inflation. That's the reason the Fed has raised interest rates. But at some point in time, what goes up must come down.
It's supply and demand. Once the home buying slows down a little bit nationwide, you're going to see the rates come down again because banks are going to want to lend money on houses. That's where they make a lot of money on the interest. So if the supply goes down with the loans not being as many loans out there, you're going to see rates come down again.
Well, here's another headline that tickles me, actually. It says, housing shortage starts easing as listings surge in June. Let me just speak to that.
Please, I want you to speak to that.
The housing shortage has been so short. The average market, what we call a perfectly balanced market in real estate, is actually 6 months worth of inventory. Honestly, I don't remember the last time we had 6 months worth of inventory. We've been working on less than 3 months worth of inventory for probably 3 to 4 years. And during the last year, it's slipped down below 2 months worth of inventory. So this is a false thing that is coming out there and it's making you think that housing is going to go down in pricing. It can't, as long as we don't have enough housing. And by the way, this is both from new construction and from a resale home. So we've still got builders that are building. I'm excited about that. The resale market is at least getting a few more listings. Those are reasons to be excited, and I believe it's a window of opportunity for a buyer to actually jump in right now, because sellers are reading it and they're thinking one thing, and buyers are reading it. And maybe they're holding off. Maybe they were looking in the market 6 months ago and got bid out by 20 other bids.
Right.
Correct.
Now's the time
Exactly.
to jump back in. So the next headline that I've got is, think home prices are going to fall, think again. And I agree with that. They're not going to fall because demand really is there to stay. And I talked too about the generational bump.
Yes.
I'll speak to that again. Boomers like me, we bought our houses in our 20s. We fixed them up, we painted them up, and we were happy with the shoebox. Millennials are buying their houses 5 years later, but guess what? They're buying them at 32, and for the next 3 years, the largest amount of millennials is going to flood the market, even bigger than baby boomers when we hit the market. So I don't think things are going to change as far as supply and demand for a long time.
I agree.
So those housing prices going up are a great thing to do.
And I think we should talk about area too, Marty. I mean, let's think about where we are and the demand to be where we are. I mean, there are markets that don't have the demand of people wanting to be in them. I mean, we have a great climate. This area is great. I mean, you can tell I'm from here. But, I mean, at the end of the day, it's here. We've got all these big companies coming in here. We've got Facebook, Apple, we've got Amazon. I mean, and then all the Google, all the car, manufacturers that are coming here. It's just amazing. So this is going to be a place where people are going to continue to have appreciation, I believe.
Yes, I believe so too. I believe strongly. And of course, I'm a Carolina gal too. So it would be hard pressed for me to move to another state as much as I love this green. I was talking to somebody out west about this area, and they said they just remembered how green it was compared to where they lived.
Yeah, I've heard that many times from people coming from different places. I can't believe how green it is here. And I'm like, yep. That's one of our beautiful things about us.
It is. So how much pain is it to get a mortgage now? I mean, it used to be quite the process. Tell me about that.
It is a process. for 30 days, you've got somebody that is invading your world. I'm looking at 2 months of your bank statements, 2 years of your tax returns, maybe in some scenarios, or at least 2 years of your W-2s. I'm asking you a ton of questions. And so it feels really invasive. I don't care who you are. But no, the reason that we will not see a 2008 again is because of the actions that we're doing today.
Right.
And that's where I know it's a little uncomfortable, but just know in 30 days it's over. And trust me, no matter what the scenario is, when we're asking you for something, it's not because we're trying to dig into your business. It's just because we're required. You know, the biggest pushback I think we both get is because we have to inquire about large deposits on bank statements. And I have to have 2 months of bank statements. So, you know, maybe you lent your brother, your cousin money, your best friend, and they paid it back, and maybe it's a large sum. I'll have to ask you about it. Well, it makes you feel uncomfortable because you don't really want to talk about it, but I have to document it based off of the Patriot Act, right?
Right.
And so I know you're not a terrorist, and I know that your friend would not be a terrorist, but unfortunately, because of what has happened to our country, we do have those steps, and we have to kind of follow it. Yeah. So if you can just bear with us for this 30-day period, I promise it'll be over and you'll be living in that house and forget all about that.
That's the truth. Is there anything you would tell or advise somebody that's getting ready to buy a house? How do they need to prepare? What do they need to look at their credit?
They need to absolutely. You should look at your credit regardless. You know, it's so easy for something to get on your credit that's not yours. And it's typically not found out until they go, you know, you go try to go buy a car or you try to go buy a house. So always keep an eye on your credit, but if you're getting ready to buy, definitely get your credit. There's so many credit companies out there that you can just get a snapshot in time from and just see where your credit scores are, see if there's anything on there that you go, this isn't mine. I can't tell you how many times that we pull credit and somebody go, that's not mine, and we go digging into it and it's not. But it still could slow down the process of you getting approved.
Right.
So it's better for you to take care of that. And knowing where your down payment's going to come from, having it seasoned. Knowing that you can't just borrow that from a personal loan, that's not allowed. I think some people they don't realize that, but it's just not allowed. Gifts can be had from family, but loans cannot.
Tell me, can a 5% loan still be done?
Absolutely.
I can do a 3%.
3% FHA?
FHA's 3.5%, but we can do a 3% conventional first-time home buyer.
Yes.
Wow. And that with going in with that fully approved, I think those have a chance to come back into the market. We haven't seen FHAs and low down payment loans get accepted. But right now, with a little bit of that window of opportunity for buyers,
there is that opportunity. And that is one thing that, and I'm going to speak on this because I know it's a hot topic in the lending world, is that unfortunately, anybody that had an FHA loan or a VA loan, because all agents aren't experienced the way you are to understand the difference and know what to kind of, you know, advise your seller. You know, these were government loans that weren't taken advantage of in the last 2 years. They really weren't. And I can't tell you how disappointing, especially when it's a VA loan and it's a veteran.
Yes.
Just because somebody doesn't have the knowledge to understand. But one thing that Chris and I have done, if you've taken the time to get approved with us, we get on the phone and talk about it and talk it through. With again, sometimes agents aren't as seasoned as Marti and know what Marti knows, and so they kind of put that wall up against those. And so we really get on the phone and educate why our client is just as strong as a cash offer.
Yeah, I love it when Sherry's an advocate for our buyers as much as we are. You know, and always helps to hear from more than one person.
Yes,
what they call it, social proof.
That's right.
It is. You know,
teamwork, teaming up for the buyer on the buyer's benefit. Yep, and listing agents love to hear from us. You know, tout the strength of the borrower, whether it be FHA, VA. You know, because you're right, conventional loans and conventional buyers have, you know, flooded the market because it seems like the easier path. Where, you know, FHA used to have a real bad, you know, stigma with it because the house had to be perfect. It's not really that bad anymore. So, you know, an FHA borrower and VA borrower should be taken as serious as a conventional borrower.
Absolutely.
And you know, Marti, that if they get pre-approved with me, I'm giving your team a certificate to show to a listing agent to say, hey, if we don't hit our closing date, I'm going to pay the seller $2,500. If that's not confident in what you do, I don't know anyone in the market that's doing what I'm doing.
I love that. I love that. If you don't hit the closing date, you write out a check for the seller, $2,500.
for their inconvenience.
So how many $2,500 checks have you written
I
out?
haven't
We are batting at thunder.
In other words, they hit their dates,
Yes.
which people are depending on, And over the years, I've worked with lenders that just didn't understand the importance of that date, that the seller had moving plans, had movers reserved, the buyer had movers reserved. The world is planning on that date. And then they say, I can't do it it'll be another 10 days or something.
And have people in hotels and
it's a
animals,
domino
and it's just horrid.
Yeah,
So,
it is.
yeah.
So I really respect that a lot, and I thank you for that. Now I'm gonna end up by tell me what the buyers that you have dealt with, what has been some of their biggest hurdles that they've had to overcome in order to get a home?
I think
Things that you've solved.
Well, man, we got a lot of problems. I don't know. I think, one of the big thing is understanding that employment is key, and job hopping. And a lot of times it makes sense, right? I never want anybody not to get approved or not take a job because they're thinking about buying a house. But make sure that it's beneficial to you. The problems that a lot of times come about is maybe I've been W-2'd at a company for 20 years, but this other company offers me something great, but maybe they're making me get compensated 1099. Well, then I'm a self-employed borrower.
Mm-hmm.
Well, then I got to wait 2 years. Okay, so those are things you want to, how am I getting paid? Or maybe they were a W-2 employee and they didn't get any commission, and they come over here and now 50% of their job is commission, but they've never had a past history of commission.
Right.
That becomes a problem. Okay, you got to have 2-year history on that or overtime. So there's a lot of things like that. And then self-employed borrowers. Chris and I do an excellent job, and I'm just going to tout us all day long, because when it comes to self-employed borrowers, we have gotten multiple self-employed borrowers that they have been turned down at many lenders, and we have gotten them closed.
How did you do it?
We did it by knowing guidelines, and we did it for really being an advocate for your client. And again, there's a lot of great lenders out there, and we're surely not the only ones, but there are some that don't have the experience we have. They haven't seen what we've seen. So when you've done as many loans as Chris and I have, we found ways to get things done for clients where other people, yes, it takes a lot more work.
Yes.
But everybody deserves a home.
Everybody deserves a home.
And I'm not going to go home at night and close my eyes and think, you know what, I didn't give my very best to that client, and now they don't have a house.
That's awesome. That's awesome.
That's the priority. Everybody deserves a home, period.
That's right. And that's the reason I work with the people I work with, just that exact explanation of why they do business, how they do business, the heart of their business is phenomenal. So I'm going to end it here, but I do have one question. Let me see my wonderful. Can you refinance during a buy-down period?
Yes, you can.
And what is the benefit of that?
The benefit of the refinancing during the buy down period is A, you can get into the lower interest rate, but B, the money you paid up front, it will go towards paying down the principal balance on the loan. So it's a win-win, which I'm glad they asked that question. It's an excellent question, because that way the 2-1 buy down, you don't lose money by paying the upfront money if the rates drop during that buy down period.
That's awesome.
Yes.
Plus, that could take a couple of years off your mortgage, just so you know.
Yes, that's correct.
Awesome.
Yep.
That's awesome. If one more questions, any more questions? Guys, thanks for joining us today. I hope you learned a few things. I know these guys know this business up one side and down the other, and you couldn't be in safer hands when you decide to buy a home, if you need a mortgage or anybody in your family needs a mortgage. So take care. Remember, Sherry Riano, Chris Bazell, thank you for joining us.
Thank you, Marty. Thanks for having us.
Take care.